Hello, everybody, and good afternoon. So I'm going to be presenting the first item that was voted during the September general meeting. And the item is P2 RAM effective date. This is in effect a clarification. We got a large number of questions last year in 2019 asking us when the changes in RAM 2019 should apply. And we construed from that the text in RAM was possibly not as clear as it should be. So we amended it to make it clearer. The new text states, for invoices settled within the clearinghouse, amendments or additions shall become effective with transactions invoiced from the first period P1 of the month indicated at the bottom of each RAM page unless otherwise indicated. Now this means that unless it is indicated in the paragraph, the change is applicable for invoices settled through ICH on P1 of the year, of the month, sorry, that is at the bottom of the RAM page. So if the month at the bottom of the RAM page is January 2020, this means that the change is applicable from P1 of January 2020. For invoices settled outside the ICH, the changes would be applicable from the 1st of January 2020. And I pass the floor to Priscilla for the next agenda item.
Good morning, everyone. Again, my name is Priscilla Stiller. I will be presenting P3, which talks about the discount codes. So P3 is adding a verbiage to the RAM of acceptable discount codes by referencing IATA Resolution 728 at the end of the first paragraph of RAM Chapter 8.2 1.1.1 under the basic billing rules. The wording is as follows. When the ticket is issued with passenger type codes eligible for discounts listed in IATA Resolution 728, paragraph 1.5, fares and passenger type codes, the applicable discounts shall be applied. So the next one is back to Sophie.
So, hello again. So we are looking at P4, billing passenger flight coupons. In RAM A2, there is a text that regulates how to calculate the fare when there is a voluntary reissue of a ticket. In the event when a change is made to the first sector of the journey. However, there is nothing to clarify what change to first sector actually means. And there are different understandings on this, which have been creating disputes. Therefore, the Chapter A2 paragraph 1.1.3.1 was amended in September to bring clarification as to what a change to first sector means. Now, the change to first sector will mean any change that will affect the ticket pricing. That is, change to the sector itself, from airport and the to airport. In other words, the origin and the destination, the carrier, the RBD, the flight date, the flight number, and the fare basis. So any change to those elements should be considered as a change to first sector. And I give the floor back to Priscilla for the next item.
Okay, P5 is a change to the involuntary billing methodology. So the change will be effective April 1 of 2020. Now, this change is a simplification for the involuntary reroutes insofar as which arises from the new routing shall be applied for billings regardless of collection. So the current RAM chapter 1822 will be deleted and replaced with the following. For involuntary changes, the TFC amounts published in the IATA Revenue Accounting Tax Database, the RATD, the arising from the revised routing shall be deemed applicable. Furthermore, exemptions filed in the RATD shall be a little bit, sorry, I apologize for that. It's based on the complete ticket data of the revised routing, including both the from to panel, the good for passage, and the fare calculation area, if that is available. So moving to the next page, this is a better view of, or a breakdown of the involuntary billing changes. As you can see, the graph shows that the effective date of current process, January of 2019, and then the new process of April 2020. So the tax evaluation and the application of the taxes, the current rule is comparing the taxes of the old routing and the new revised routing. So this change in April, there will be no comparison. The applicable taxes of the new routing shall be used and based on the complete ticket data of the revised routing. So you have to both use the good for passage and the fare calculation area. So is the tax, billable tax amount capped? It is today. The billable tax is capped based on the new routing, and it cannot exceed the taxes of the old routing. So the changes now in April will be, there's no cap, and the billable tax amount will be based on the new routing with the complete ticket data shown in the revised routing, including good for passage and the fare calculation area. Does the tax exemptions apply? Yes, that has not changed. It applies today and it will apply in April. Only difference is on this change, the further expansion of the verbiage of the exemptions includes shall be applied irrespective of the reason. In the next few slides, we will show a few examples, and the examples, the first one here, as you see, is dependent on the applicable based on the final destination. So it's very important to draw your attention to including the good for passage and the fare calculation area. So here's an example of the OY tax, which is Germany Air Transportation Tax. As you can see, if you look at the good for passage and not include the fare calculation area, you will see that it's only showing Berlin, Helsinki to Paris. However, in your revenue accounting system, you must look at the entire routing as shown in the fare calculation area, which will be based on the final destination of Melbourne. The next example is in regards to wholly domestic travel. The example of UO tax is based on whether it's wholly domestic. If you look at only the good for passage from Melbourne, Sydney to Brisbane, this would be wholly domestic. However, you must look at and consider the fare calculation area, which starts in Auckland. So this will change your tax application. The third example is transit transfer versus stopover, and the example is the Dubai departure tax. Now there's several departure taxes, the AE, TP, ZR, and F6. And these are based on whether it's a domestic or stopover. I'm sorry, this is based on transfer transit versus stopover. So if you look at the good for passage only from Dubai, Delhi to Mumbai, which is not a transit here. However, if you look at the entire fare calculation area, you will have to see that it originates from Frankfurt, and the final destination is Palm Bay. So Dubai is a transit point. So I will turn that next one over to Sophie.
Hello again, and just to underline that this change, the P5 change for billing of taxes on involuntary rerouted tickets, is applicable as from April 2020, and this is mentioned on the relevant chapter. So it's an exception to the other changes which are applicable as from P1 of January 2020. Now on to P9. P9, billing in case of exchange. This concerns chapter A2 2.1. We, the RAM editor group, felt that this paragraph needed simplified and improving. The purpose of this paragraph is to explain how the coupons that were used as an exchange by a rerouting carrier to issue a new ticket should be billed. So we are talking about the original coupons exchanged by the reissuing carrier. And these original flight coupons should be billed on the basis of the correct fare in accordance with chapter A2 1.1.1. I give the floor to Priscilla for the next item.
Okay, P10 is to provide a rule for private fare discounts when the receiving carrier bills the lowest applicable fare. Therefore, RAM A2 paragraph 3 will state the following. Note 2, except for passenger type CH and IN, which is child and infant, no discount arising from a private fare type may be applied to the lowest applicable fare.
And I think it's back over to me, Priscilla. So we will move on to P11. This item was about supporting documents, and it is simply a change to put the correct verbiage in the right place. Again, a RAM editor group change. We realized that for source codes 90, 95, and 96, which are source codes for billing frequent flyer coupons, these source codes were the use of supporting documents for these source codes were not in the right, explicited in the right chapter. So we moved them. We changed A3.1.1 and removed reference to source code 90 because it's an optional source code and should not be in an A3 chapter. And we moved this so the source codes 90, 95, and 96 to the chapter B10 where they should be. So there is a note in chapter B10 now saying no supporting documents are required to substantiate billings under source code 90, 95, and 96. And Priscilla, over to you.
Sorry, the paper P13 for passenger RAM rule A10. 0.4.1.3 and A10 5.2.1.2 regarding rejection memos on multiple coupons. This is a clarification of existing rule to further provide clarity with added sentence in the RAM paragraphs. So as you can see, we've added the last sentence in the two reference paragraphs, which states this applies whether the coupons rejected on multiple tickets or the same ticket. As you can see, there is an illustration and an example where the ATBP is shown. We already know that the rejection memo for prorate difference on coupons of same origin destination of multiple tickets is permitted. However, there's been disputes on prorate difference on same amount to be prorated. That is permitted with this rule. It is a clarification. Back to Sophie.
Okay, next one is P14, use of the prorate slip for rejection. Normally, when there is a rejection for prorate difference, there should be a prorate slip which explains how the proration should be done and why the rejection is being made for prorate difference. Now, this is referenced in Chapter A10, paragraph A.5, and in the SIS participation guide. A clear prorate slip is obviously very important and very helpful for airlines in order to understand how the proration is done by the rejecting airline. Now, some airlines are not using this prorate slip and they are putting the information in the rejection remarks, which makes it much harder for airlines to locate where the information is. Now, the purpose of this item was to make it completely clear that a prorate slip is mandatory and that it should be put in the correct place. So, in case of rejecting a prorate difference, a supporting document or prorate slip with the amount to be prorated, the prorated sectors, the prorate factor, and the proration details shall be provided. They shall not be put in the rejection remarks field. There is a dedicated field, and I'm repeating this so it's completely clear. There's a dedicated field in the ISIDEC and the ISXML that provides 50 occurrences of 80 character free text elements. This is where the prorate slip should be put. And it's back to Priscilla for the next one.
Okay, P15 is to remove the contradiction and align the currency conversion example shown in RAM A12-143 to that of the rounding off rule stated in 1.5. So as you can see, we have updated, and that's highlighted in red with a new example. So now there is no contradiction, and will also apply to the cargo section of paragraph 2.5 and 2.4.3. Back to Sophie.
The next item that was voted was P17. It's a recommendation. It concerns billing of interlineable taxes. Now, today in RAM, it is defined that taxes to be billed for interline settlement are published in the Revenue Accounting Tax Database, the enhanced RATD. However, the way that airlines use this data and the way they update their referential tax database is left entirely up to them. Most airlines do this manually, and this, of course, results in possible coding errors. The changes are not always done with good timing, and they are, of course, they may be misinterpretation of the referential data in the RATD. All this may cause differences in tax calculations between airlines and rejections and disputes. And today, in today's world, the goal is to automate as much as possible the manual tasks that are causing costs because they are requiring resources to key in information. Indeed, in recommended practice 1723, there is a paragraph that recommends use of automated tax data for pricing systems. And we felt that we should do the same thing in the RAM. What can we use as an automated tax data source? ATPCO produces a machine-readable file, which is called X1. It's based on the contents of the enhanced RATD, and it therefore can be used as a source of data for airline tax referential databases. This ensures that there's a timely and correct update of the referential data, and it ensures also that the information and rules are shared by all the airlines, since they are using the same source. Therefore, the IBS OPS requested permission to authorize RAM Editor Group to create a RAM-B chapter, which is a recommendation, to encourage airlines to use this enhanced RATD X1 file as a source of tax referential data to update their systems in an automated way. There will also be a reference to the ATPCO TCN file, which contains the detailed tax amounts per tax code and per coupon. There's also a recommendation to use this as a source for airlines who would prefer not to build their own tax calculation tool. And now it's back to Priscilla for the next item.
So for P18, deleting IATA Resolution 735D reference from RAM Chapter B9. This authorizes the RAM Editor Group to remove this reference of 735D as FIMs are no longer valid in the IATA resolution. So it's just a deletion of that role or that reference. Back to Sophie.
Well, that was nice and quick, Priscilla. Okay, now P19, UATP fee to be deducted in prime billings. When a ticket has been paid for using a UATP card, there is a discount that applies on the billing, the prime billing. This UATP discount had a field introduced by SIS in 2011. It's called the UATP discount field. And it's to be used by airlines to put the UATP discount amount on the prime billings in order to prevent or to avoid rejections to request the UATP discount back from the billing carrier. This field is not used as much as it should. And what we have noticed over the last 2 to 3 years is an increasing amount of rejections due to UATP reclaim. And that's first stage rejections and second stage rejections. The increase is of 175% between 2015 and 2018, and it ranks fourth for first stage rejections. Now that is a lot. I think these rejections are, I would say, reasonably simple to overcome if you use the UATP discount field. And P19, the purpose of P19 was to clarify that the use of this field is mandatory. It is not a change to the RAM. It is a clarification. It was already the rule, even if many airlines did not apply it. So the new text reads, airlines participating in the UATP agreement shall deduct the applicable UATP merchant service fee when billing original passenger invoices. This is to encourage airlines to either add this to their systems or get their system providers to add this to the system so that we can avoid these unnecessary rejections. Thank you. Priscilla, it's back to you for the last item, I think.
Okay, so the last item is the cargo. It is the change in the timeline from 6 months to 5 months. So the A8.5.1 on the original billing, rejections, and correspondence stage. It is updating the chart shown here in the next presentation. Is, as you can see, the billing of the first rejection, second rejection, and then third rejections change from 6 months to 5 months. And this is just an update to align as it is happening today in real life situation that most changes are occurring within the 5 months period. So we have concluded all of the papers that passed, and we will complete this, and we have a contact list. If there's any further questions, clarifications you need in regards to any of these papers that passed this September, that became effective January 1, 2020, we will open the floor up for any questions. I know that we've ran through this pretty quickly. All the changes are in red font, so it's quickly viewable and understanding of what the changes are.